Hey guys, hope everything's going well. You guys know that drill. Smash that like button, subscribe if you haven't, and comment down below. Follow me on Instagram at AIH_sports. Follow me on my finance channel at AIH Finance. Also, follow my buddy who was on last night, John, at the J22 Report on YouTube if you liked his content. Okay, a few things. I was talking about me doing a video about the coming recession. Now, I don't see it tomorrow, but I do see it coming probably within the next few years, and how it's going to change my strategy in regards to sports cards. So, yeah, let me just talk about this. So, this is more of an economic video, but I'm going to tell what I'm looking for and how I'll be tackling in regards to sports cards, and how I'll be tackling other assets as well. Once again, this is not investment advice. I'm just telling you what I plan to do. And alrighty, so in regards to the recession, right? So what happens, what is a precursor to a recession? Usually when you see the yield curve, when that inverts, you have most likely a recession coming. And how does this make sense? Okay, so I tell you that I look at the Austrian Business School, and what they talk about is in our society, banking society, you lend short-term liquid securities, and it's invested into long-term illiquid securities. This works as long as the business is not the business, as long as the economy is growing. The minute the yield curve inverts, that is a problem for the economy, because no longer you could take those liquid securities and turn into illiquid securities. People have to raise cash, long story short. And another thing is that if you have long-term rates that are priced much lower than short-term interest rates, that's showing you that the market is pricing in less inflation over time. What you want to see is, you want to see inflation gradually rising over time, or you want to see interest rates rising over time, because that's showing that, hey, there's optimistic growth expectations. So what I like looking at is the short-term rates versus the 10-year rates. So either the Fed funds rates or the 3-month yield versus the 10-year. And what happens, what's happening right now, though, is if you look at further out in the curve, the 7-year yield versus the 10-year yield, that's inverted. That's showing signs of potential stress coming in the future. And if you're just looking at it, the 7-year rate, when that's greater than a 10-year rate, you're probably going to have, that's a precursor to a recession. I've been listening to this economist, Jeffrey Snyder, and his research showed that in the 1990-1991 recession, or around there, those yields were inverted. If you look at the 1998 situation that happened in Asia, I think there's an Asian financial crisis. A few years later, you had the dot-com bubble, okay? And this, in my opinion, is going to be much worse than what happened during the dot-com era. But hopefully I'm wrong. But long story short, the 7-year yield, I believe, is what, 2.5. The 10-year yield is what, close to 2.3 something. Last time I checked, I have to double check the numbers, but that's an inversion of the curve. And when you have that, it's showing signs of stress in terms of the what the smart money thinks. Now, it doesn't mean that a recession is happening today, but it's going to most likely happen in the next few years. And when that happens, you want to look at other yield curves. So like I was saying, the 3-month yield versus the 10-year yield, that's still upward sloping. I believe the 3-month yield is 50, 60 basis points, and then the 10-year is 2.3, whatever it is. So that's going in the right direction right now, but in coming years, that's probably going to invert. I've looked at other yields too. Some of these swap spreads, they've been inverted. I think the 2 and the 10 years. The Eurodollar futures showing inversion later on. So you may be saying, like, who cares, right? Why does that matter for sports card? So I've looked at just data, and from like 2008, 2009, there were discounts in sports cards when the market went down. And I've been calling for, a market correction in 2024 in the stock market. So when I see stuff like this going on, that's the time when I want to be looking for potential deals. And some people in my live stream, this is a Sunday night still, but I'll be posting this Monday morning. Yeah, there may be some vintage cards that may hold value. I believe that most of the cards will be going down, but I believe vintage will probably hold the best as long as it didn't go super crazy high, as long as it wasn't pumped up. But that being said, yeah, in the next few years, when we see like more stress in the economy, more yield curve inversion, that's when I want to start to look for potential cards, and I want to see how active people are in regards to the buying and selling activity. Today, my buddy John was talking about, hey, during tough times, sometimes people sell these collectibles just to raise cash. And that may be a time, in my opinion, for myself to move in and be more aggressive. I don't want to be aggressive right now from a speculative perspective, even a collecting perspective, because right now people are still interested in sports cards. Even though I talk about, the market has gone down, you see the sports card shows, people are still actively interested. So there has been a floor, I believe, temporarily, but next few years, when people get desperate, need to raise cash, if they lose their job or they're scared of losing their jobs, people probably won't be speculating that much in collectibles. Maybe some of the high-end stuff, people will still put a bid to that, but that's when I want to be aggressive, when no one really else is. I mean, right now we do have some of the pumpers, starting to talk about this sector or that sector. Okay, that's based on hype. In my opinion, selling the hype is much better than buying the hype. Okay. And in addition, I believe that over long periods of time, for myself, I can't tell you what to do. I want to be looking at cards that people will continue to buy over the long run. Right? I talked about Gretzky. I talked about Jordan. I talked about what's his face? And I didn't talk about it. I was thinking about this. Like some of the greatest players in baseball. You got Willie Mays. You got Hank Aaron. Like those cards, I want to look at those. It's not necessarily the rookie cards, but some of these PSA cards, if they come towards a discount, I want to buy them because people will still buy them, in my opinion, and there will be a floor to that. And some of the higher PSA 8s, 9s, 7s for those individuals. Once again, I want to buy fear and I want to sell greed. I want to buy it during a time where there's deflation, not aggressively when there's inflation like we have right now. In my opinion, a great time for people to have purchased was in 2018. But it was kind of quiet, and now a lot of speculative activities going on, and still we're coming out of this pandemic, we're coming out of this easy money policy situation. I really don't want to buy right now. But anyways, guys, I did want to give you an update in regards to the recession and the reset everyone talks about. And yeah, I just wanted to give my thoughts. Anyways, you guys know that drill. Smash that like button, subscribe if you haven't, comment down below, guys. Thank you. Bye.